I'm Jonathan with the Yukon Project, and today we're going to talk about financial advisors. Who are they? What do they do? And are they worth the money? What is a financial advisor? Such a simple question, but the answer can be awfully confusing. A financial advisor is a legal designation for someone who is approved by certification to provide financial advice, especially when it comes to investing and where to put your money. It sounds simple enough, but there are over 230 different certifications that are all considered financial advisors. Those certifications can be incredibly specialized. What does a financial advisor do? Since there are so many different types of financial advisors, not all advisors do the same thing. If we want to be really simplistic, we can say that all financial advisors help people make decisions about their money and finances. You can find advisors that can help you with any of the following things: debt elimination, wealth management, retirement planning, estate planning, financial therapy, life transition planning, tax management, financial behavior, investing, and wealth creation. And this is not even an exhaustive list. What are the different types of financial advisors? There are more financial advisor designations than I can cover in this video, and most of us are unlikely to ever need their services. The most common financial advisor is the Certified Public Accountant. They represent about 2/3 of all financial advisors in the country. The next biggest group is the Certified Financial Planner, which represents about 10% of financial advisors. Chartered Financial Analysts represent about 6%, but these professionals serve institutions. Chartered Financial Consultants represent 4% of the financial advisors. But the other thing to keep in mind is that a financial advisor can hold more than one designation. You will often see an alphabet soup behind someone's name. All that means is that that person fulfilled the requirements to hold and maintain that designation. If you decode the letters after their name, you get a feel for the kind of expertise that they have. What does it take to become a financial advisor? Every financial advisor designation has its own set of requirements that are maintained by a nonprofit organization that governs that designation. So there is no one path, but the path for a certified financial planner is representative. A CFP must do coursework with a registered program, earn a bachelor's degree, pass a 3-hour exam, and complete at least 4,000 hours of related experience. It takes between 18 and 24 months to become a certified financial planner. After they've earned the designation, they are still required to do continuing education to maintain it throughout their career. What is a certified financial planner? A financial planner is a type of financial advisor who focuses on creating a comprehensive financial plan that takes into account all aspects of your financial life. This may include investment management, insurance, retirement planning, tax planning, budgeting, cash flow management, and estate planning. Financial planners typically work independently or for a financial planning firm. What does it mean for a financial advisor to be a fiduciary? The word fiduciary is a pretty fancy word that we just don't use every day, but its meaning is actually pretty simple. A fiduciary is a person who is legally obligated to put someone else's interests first in the way that they act. That means that a financial advisor who has a fiduciary responsibility toward his or her client must put their client's interests above their own. A fiduciary must make recommendations that are in your best interest. That means they can't go encouraging you to buy a life insurance policy that gives them a big commission when another option would be better for you. Why is it important that your financial advisor is a fiduciary? There are 3 main reasons why you would want your financial advisor to be a fiduciary. First, fiduciaries are obligated to disclose any conflicts of interest that they have. Second, fiduciaries are required to act in your best interest at all times. Third, fiduciaries are held to a higher standard of care. This means that if a fiduciary makes a mistake that results in you losing money, they may be held liable for your losses. This does not mean, of course, that a fiduciary can't lose money or that you could demand that they make up for any losses that you have. But it does mean that they have an obligation to exercise more responsibility when working on your account. How do financial advisors get paid? Financial advisors can get paid in two broad ways. The first is that they can earn commissions on products that they sell you. This was more common in the past, and more financial advisors are moving away from this approach because it can open them up to conflicts of interest. The second way that a financial advisor can get paid is through a fee-based compensation. That fee can be calculated in three different ways. The first type of fee-based compensation is a flat fee. A financial advisor may charge a flat fee for a few $1,000s to prepare a long-term financial plan for you. When they deliver the plan, their engagement is finished. The second type of fee-based compensation is paying them by the hour. And the last type of fee-based compensation is where the financial advisor charges you a percentage of the assets that they are managing every year. This is mainly used by advisors who are managing wealth and investments. So which type of fee structure is best? Well, it depends. If you have a distinct project and you don't need a long-term relationship, you could probably go with a flat fee. If you want to maintain a relationship with someone but you don't have a lot of investable wealth, then a per-hour charge is probably best. If you want someone hands-on to give you a lot of attention and you have investable wealth, the assets under management is probably best. Is a financial advisor worth it? This is a question we could ask about just about anything in life. And the answer probably depends on your personal capacity to navigate an increasingly complicated financial system. Do you feel comfortable doing it? Do you enjoy doing it? What are the costs of getting something wrong? And therefore, what would it be worth to pay someone to help you get it right? A good financial advisor who has expertise that aligns with the issues that you are facing could be a great investment, but only if you're prepared to work with them constructively. Do you need money before a financial advisor will help you? Not necessarily. First, you need to determine what kind of help you need, and then you can find a financial advisor that will work best with you. If you are starting out in your career, you can pay a financial advisor to prepare a financial plan that you can work towards. If you have a lot of consumer debt, you can find an advisor that can help you develop a plan to pay it off. If you have specific experiences as a financial advisor or because you've worked with one, please consider leaving a comment below so others can benefit from your insights. If you're looking for a financial advisor, consider heading on over to the Yukon Project. We've got a tool where you can answer a few questions and get matched with up to 3 financial advisors in your area. If you found this video useful, please smash that like button and consider subscribing to our channel. And as always, thanks for watching.